Hello everyone, welcome to this session. This session we will talk about what is transaction monitoring, what are the elements of transaction monitoring, what are the uses of transaction monitoring, and which are the entities which require to perform transaction monitoring. Now first let's understand what is transaction monitoring. Basically the word transaction monitoring means monitoring the transaction performed by the client. Now it is mandatory for every financial institution or a bank to to perform a transaction monitoring of their client on a periodic basis. Now basically every customer of a bank or a financial institution, they do two major types of transaction. One, a transaction to money which actually comes into the organization, and the money which actually leaves or means the customer a transaction, something we call as a debit is where the money is actually leaving, means money is sent across from the account, it's how it is debited. And the credit talks about the any fund or a money which comes in the customer account. So basically these are two major categories of transaction which need to be monitored. So this is about transaction monitoring. Now to be explained in a briefly what is transaction monitoring is, the transaction monitoring is the process where a bank or a financial institution analyze this transaction to understand the nature and the purpose of this transaction. Now what are the things that are actually analyzed? First one, when I say who is the recipient or who is actually the payer, means if the money is actually transferred to a customer account, the bank need to understand who is the one who is actually transferring this money into the customer account. Or if the customer is actually paying someone, they need to understand who is the recipient of this one. First, it is under who is the payment, means the customers, the sender or receivers, geographic location, nature of relationship are actually analyzed. So these are some of the things which are analyzed in transaction monitoring. Transaction monitoring approaches. So when we come to transaction monitoring approaches, that can be one real time, or that can sometimes it can be a real time transaction monitoring, means the transaction monitoring it is happening on a real time. As and when the customer performs the transactions, it has been monitored. Usually real time transaction monitoring are done by transaction monitoring softwares or transaction monitoring algos. The second method of doing transaction monitoring is manual. So manual is where a AML analyst basically downloads the list of transaction done by the client, and he checks or evaluates each transaction is been evaluated. So basically when it comes to transaction monitoring can be a real time or it can be a manual depending on the requirement of the bank. Now what is the transaction monitoring, what is transaction monitoring aims at? Now transaction monitoring aims at to prevent certain economic and financial crimes. For example, transaction monitoring is aimed at preventing money laundering. Transaction monitoring is aimed at preventing terrorist financing. Now transaction monitoring is actually done with the aim of preventing any fraud, or the transaction monitoring also can be done to check if there is any identity theft or similar crimes like, for example, corruption, bribery, etc. Now these are some of the types of transaction which the transaction monitoring which the bank is wanted to identify such kind of transaction. With that purpose, transaction monitoring is performed. Now who needs to do the transaction monitoring? Now as per the FATF and the regulations, and also by the regulations around the world, there are some entities, it is for them it is mandated to do the transaction monitoring. One, the transaction monitoring have to be performed by the money services or money transfer companies. So basically money services or money transfer companies are those companies or entities which help the clients to transfer money from one location to the location. The very famous example being the Western Union money transfer. So these companies or entities help the client to move the money from one location to other location. Now the transaction monitoring have to be done by the banks. So banks, commercial banks or investment banks who provides these services to the client. So the client can be a individual customer, or it can be a corporate customer. So it can be a retail customer or for a commercial customer. So the bank have to perform the transaction monitoring for the clients. Next one is financial services front. So there are certain companies which provide financial services. For example, they can into providing insurance services or other financial services. So they have to perform the transaction monitoring services. Then we have a fintech. Now fintechs who actually provide technology, it's those technical or tech companies which provide financial services are known as a fintechs. Now the fintechs are been mandated to do the transaction monitoring. Then we have a lending companies, the companies which basically it can be a bank or a financial institution which provides the lending services to their retail clients or a corporate clients. So they have to provide the lending exchange. Then we have exchanges. Exchanges is basically the stock exchanges or any authorized entities where the buying and selling of securities takes place. So it is mandatory for them to perform the transaction monitoring. Then we have cryptocurrencies and the cryptocurrencies exchanges, they have to do the transaction monitoring. Then we have brokerages. So brokerages are basically who helps the customers to buy and sell the financial securities like equities, bonds, etc. Now these brokerages who are acting as a broker for their customer have to perform the transaction monitoring. Then insurance companies, basically insurance companies offer variety of insurance product to their clients, and it is since insurance also one of the methods through which money laundering can be utilized for money laundering. It is essential for insurance companies to perform the transaction monitoring. And finally, legal professionals who are providing legal services to the financial institutions. So they also need to perform the transaction monitoring services. So these are some of the firms which have to do the transaction monitoring. Now, let's look at some of the users of transaction monitoring. What are the main users of transaction monitoring? First is compliance. Now, every bank or a financial institution have to perform the transaction monitoring because it is a compliance or regulatory requirement. Every regulator, be it FATF or country-wise regulators, like for example in India it is PMLA regulators or a BSA Act in BSA Act or a Patriot Act of in US, they mandate the banks and financial institutions to do a transaction monitoring. So first one, it's a compliance requirement. Second is risk management. Now transaction monitoring helps the banks to manage various risks, like operational risk, reputational risk or legal risk. Third is transaction monitoring is essential for fraud prevention. So it can, if the banks or a financial institution can track and do a transaction monitoring effectively, it will help them to prevent a fraud or any other financial crimes. Then transaction monitoring is required as a part of investigation. Let's say for example, the regulators wants the banks or a financial institution to perform the transaction monitoring. Let's say for example in US, if the FBI is doing doing an investigation, at the part of investigation, they might ask the financial institution to do the transaction monitoring. So these are some of the uses of, or what is the purpose of transaction monitoring. Now let's look at transaction monitoring stages. Now the transaction monitoring which is carried out by the financial institution or a banks, which happens in a series of stages. First, there is a data collection. Now in a data collection is a stage where the banks or a financial institution which is performing transaction monitoring have to collect a series of reports which is required for carrying out this transaction monitoring activity. The report can be a CTR report. For example, CTR stands for cash transaction report. It gives the report of all the cash transaction done by the customer or a third party in a concerned account. So that is CTR report, or they might need a TTR report. TTR report stands for trade and transaction reports, a series of trade or transaction done by the customer. So in the first stage data collection, all the reports which is essential for carrying out the transaction monitoring need to be collected. The second stage is risk profiling. Now risk profiling is basically to set what is the risk of the client. Now it is very essential for a bank which is performing a transaction monitoring to understand what is the risk of the client. They need to know whether the client is a low risk client, or the client is a medium risk client, or the client is a high risk client. Now another important use is, depending on the risk of the client, the transaction monitoring duration will be set up. For example, low customers who are considered to be low risk, they will be for them they can conduct the transaction monitoring, let's say for example every quarter. And if they're seen as a medium risk client, so they can conduct the transaction monitoring, let's say for every once in 45 days or once in 2 months. Or if the customer feels that the customer is of high risk, then they need to do the transaction monitoring at a shorter duration, let's say about like once in 15 days or a month. So the Second stage is risk profiling. Basically, they are actually categorizing the client into medium risk, low risk, medium risk, high risk, and low risk. Third stage is rule setting. So basically, for a transaction monitoring, the main aim of doing transaction monitoring is they need to categorize the transaction into suspicious and normal transactions. So in order to know what is a suspicious transaction, certain rules have to be set. For example, the rule is like if there is frequent deposits are happening in the customer account below the reporting threshold level, okay, then that's a suspicious transaction. Or if the customer is actually doing frequent night deposits, so that can be seen as a suspicious transaction. Like that, the banks set up multiple rules to identify which is a transaction. Now this happens in the third stage. The fourth stage of transaction monitoring is transaction analysis. So analysis is the detailed evaluation of the transaction which are carried out by the client. Okay. Now when they are performing a transaction client, they understand depending, let's say for example, wire in or wire out. So they need to understand where is the wire actually coming from, means who is transferring the money, from which country is it's coming from, and is there any business relationship for the wire transfer. If there is a business relationship, is the documents, they have sufficient documents. For example, let's say it is done as a part of the trade, is a part of the export or import. So they need to make sure that is there enough evidence like invoices available. So this kind of analysis are performed in stage 4, which is transaction analysis. Now the transaction analysis which is done in the fourth stage can help them to identify the transaction into suspicious or a non-suspicious. If they identify any suspicious transaction, then a detailed investigation need to be carried on, and if required, they need to file a suspicious activity report. So the fifth stage of transaction monitoring is case management, and the last one is reporting and record keeping. So in the fifth stage, once they identify suspicious transaction, the bank will perform a detailed analysis or detailed investigation of the transaction, and if required, they need to file a SAR report or a suspicious activity report. So these are the 6 stages of a transaction monitoring. Now to summarize, in this session, we have looked at what is a transaction monitoring, which entities are supposed to perform a transaction monitoring, what are the uses of transaction monitoring, and the stages of transaction monitoring. Thanks for your time.